Hey all, good afternoon. Um, Blake is going to be with us. He's just Stelios the same. He's going to. Blake was on some kind of an event competition that had to do with non-farm payrolls. Um, he told me in advance that he might be a few minutes late today, so we're going to start together, and he's going to join probably any minute. Stelios will need a few minutes as well, and he's going to be with us. Um, so let's go to the markets, and Blake is going to tell us when he's here, and he can do the bias chart, and we'll pick up from there once again. So so far, post data, the market is reacting. The combination of reactions from the market are exactly what somebody would expect if the data were bad. So things are moving in the correlation of things is exactly what you would expect. Dollar down, equities higher, etc. But that's the reaction we would expect if the data were weaker. So it is a big question mark of why the market so far is reacting like this. Because from the data, somebody would expect that the dollar would strengthen, yields would strengthen, and a little question mark.
Hey, good morning.
Hey, mate. I was just explaining that the market's reaction is peculiar.
What do you mean?
To the data.
Why, that we're higher?
We were saying with Stelios, at the F.A.C.E webinar, that weak data would probably be equity positive, because of course that would delay even further any reaction from the Fed, and at the same time would be dollar negative most likely, or dollar neutral in any case. And very good data would probably be dollar positive, yield positive, and likely equity negative, because we know how elevated equities are, and at a huge extent this is due to extremely easy monetary policy, quantitative easing, so on and so forth. So any headwind to the possibility of the Fed remaining loose and easy for as long as possible probably wouldn't be liked by equity investors. So I find it quite peculiar that we had this reaction.
Well, I don't agree. Well, I agree, but I mean, stocks are higher. Look, we're going into a 3-day weekend here in the U.S. The market's thinking, oh, look, average hourly earnings is down, unemployment rate's still very stubbornly high, despite the bounce back in the headline number. This is a green light just to buy stocks and sell dollars. I mean, that's all it is. I think the only outlier that's going to be here today is maybe crude comes off after this OPEC, with this OPEC meeting and these headlines. And but other than that, I don't know. Stocks continue to trade higher. I really think that we might get a little bit of a pullback when the market opens, and I still think the dollar, despite the bounce that we're seeing in the euro and the Aussie and the sterling, I still think the dollar's acting well. I mean, the dollar's come off a little bit, but really it hasn't come off a lot.
No, I'm not talking about, we haven't seen any move that's really noteworthy.
Yeah.
But given the data, I would have expected that whatever move we've seen so far would have been in the opposite direction. That's what we were talking with Stelios before.
Got it.
In any case, it's still early
It is.
in the day, so it remains to be seen.
So
you want to grab the charts, mate, and go?
Yeah, I'll take over. I'm gonna since I haven't even gotten up really, I just kind of jumped off the trader battle, and since I'm showered this morning, I figured I might as well show you guys what I look like. So because I had to jump up at 3 o'clock this morning and shower. So I typically don't have a video or my video going at this time of the day, but I am for you guys. So But I'm going to quickly go through our charts. And then, Steve, I'll pass it over to you in about 15 minutes.
Absolutely, mate.
All right. Thanks, guys.
Stelios, by the way, Stelios is also where he's going to be in about 5 minutes, just to let you know.
Okay, cool. So really quick, let me just, talk about what I just was talking about with Steve. And yeah, the headline number is better, right? Unemployment rate is higher, so it's not as good. And average hourly earnings, and
thank you for reminding me, Blake, because I owed this to talk about it before. Why unemployment rate is higher? I haven't looked at the participation rate because I had to do something else. I'm assuming it's because the participation rate increased. Now, in my opinion, the more we see the handouts dry up, the more we're going to see a rebound in the participation rate, because a lot of people, didn't participate in the labor market. But now that the easy money is going to somewhat dry out, I think that a lot of them will have to go back in the market for a job.
You're right, and remember, a lot of states here in the U.S. Those unemployment benefits actually dried up this last month, and it takes some time for people to get back into the labor force. So you're right. I think that participation rate is going to change as a result. So we'll see. And I actually bought a little bit of U.S. dollar Canadian and U.S. dollar Norwegian krona on this dip. It isn't working out right now because obviously we're waiting for the stock market to open. But we'll see. Crude oil's looking like it might have found a high around here. We'll see. But let's talk about let's go through these pairs, and then Steve can take over. So since I have the dollar and it's up on my screen, the dollar index, we still have, despite us pulling back right now, we are below this trend line here, or you could actually argue that we're on the trend line if you want to, really take it to this lows on the 4-hour chart. While we're above this 92.20 level, and I know it's a level that we talked about yesterday, and I'm actually gonna make it 92.15, because let's do this. Here's the low, here's the high, right? 38% retracement comes in at 92.27. 50% retracement at 92.13. So I'm gonna actually write down the dollar index has support at 92.15. Okay. I still think it's bullish. I know we're coming off a little bit right now. I understand that. Nothing goes straight up or straight down either. So just realize that. And we talked about, these little trend lines yesterday, and we just kind of pivoted off of it yesterday. It is a bearish candle for right now, but it's early. And remember, stocks are going to open here in a moment. So things could really shift once that happens. Here's the 1-hour chart. Okay, so what we will mark up as resistance is going to be the 78% retracement that we are. And remember, there's a massive trend line right here. This is the big wedge. I'm actually going to mark that up versus the 78% retracement. I'm going to mark up 92.85 as being very key. Now, you might think that if we are against, excuse me, really quick, if we are against this this trend line right here, okay, that we should probably flip it back to range. That, I think, is the risk right now. But what I'd like to see is how we close today, because like I said, it's still early. It's still very early in the day to be, getting too bullish or too bearish the dollar index. So for me to flip back to neutral, I think we're going to have to move all the way back below 92. And then we'll see. Okay. All right. Let's go to the euro dollar. So here's the euro. The euro actually hit the 127% extension of this pennant, right? So here's the low, here's the high, there's the 127% extension. So that 118.10, or the low being 118.07, is going to be support today. But also below that is going to be this trend line around the 161% extension, which is 117.70. This is actually more key and more important, in my opinion. resistance for the euro. Now, I think if we start breaching highs of the session, let's go ahead and I'm going to actually look right here. That previous low, that high on the 4-hour chart, that comes in at 118.70, 118.80, roughly. I think that's resistance for right now. And if we get above that, then we might actually flip back to range. But for now, we have to stay with bearish. We have flag patterns, guys. They're all flag patterns that are still in play. I know we are trying to do a false breakdown, but remember the Aussie did this yesterday. Did a false breakdown, then continued lower, right? It looked like it was going to be a false breakdown, continued lower. It looked like we're going to be a false breakdown now in the Aussie, but by the end of the day, we could be trading down here at the 74.25, which is the 127% extension of this move of the flag right here, right? Here's the flag. So that comes in at 74.25. Still bearish. Remember, we came out of a pennant. Let's not ignore that. Let's not ignore that fact. All right. Actually, you're seeing the crude oil is nearing its lows. Dollar Norway is starting to bounce a little bit. Dollar Mexican peso is starting to bounce. Aussie dollar resistance is going to be right here at 75.10. Aussie actually looks like it might turn from up here. I'm not shorting. I pulled Aussie off the table. I'm not going to reshort it just yet. Okay. If you were in the chat room, you knew that yesterday, but I'm thinking about it. All right. Kiwi is the one that's holding up a little bit better than others. And 69.25 is going to be pretty key support. So 69. Oh, shoot. I put this in the wrong spot. Dang it. Hold on. Sorry, guys. I skipped right over the sterling. So let me do this. 75.10. Okay, let's go over to the, and by the way, the cable's still bearish too. The cable's still bearish too. I know we're up 17 pips right now, but look, we're just previous supports acting as current resistance right now. I'm going to take this and move it down a little bit to these last supports that were at the 88% retracement. You can see us hovering around there. That comes in at 38.20. And don't ignore the fact, guys, that we are creating a double top here. What's really going to be important is this support. And I'm going to actually delete that. And let me put in a horizontal line so you guys can see where that's at. It's near the 161% extension. This is really critical. I know we're finding support at the 127% extension. We are across the board. Look at the Aussie. Look at the Euro. They're all finding that 127% extension as important for now. So that's 137.30 and then 136.55. So I'm going to write down both. 136.55, 137.20, 30, 37.30. Okay. All right. Going back to the Kiwi. Now the Kiwi we're going to keep in range. Again, the Kiwi is acting better than most of the market right now. Resistance is going to be 70.30 again. Okay. Let's talk about the loonie. So the dollar Canadian, this is one that I was targeting on the trading battle. As long as we stay above this support right here, which comes in at 123.40, I still think it looks constructive. So 123.40. And I know that we're up against a lot of resistance. I understand that. But I still look at this big bull flag pattern, and 124.65 is the trend line, 88% retracement, 124.65. This is key. And if you know, yesterday, I sold mine yesterday at 123.30 something, like 35 or something like that. And I don't mind re-entering, guys. I got in earlier at 123.85, I think is where we're currently at, somewhere around here. So look, the dollar Canadian, I still feel, especially if crude oil rolls over, you know, this dollar Canadian is going to come back to these highs and really challenge this trend line resistance, which I think if this breaks, you know, then we're looking at a pretty bullish move in the dollar CAD. Okay. Dollar Swiss really holding up at the 618, but look at the pullbacks are very minor. I mean, I'm going to give you guys the same numbers as yesterday. 92.70. We either wrote down 65 or 70. 92.65. I'll write down 70. I want to put an asterisk because it's a 618. I still think we're bullish. And while we're above this right here, this level, which is at 91.60, and I think we dropped it all the way down to 91.50. I think we have to stay bullish. Let me go double check that from yesterday. 91.50, 91.60. Okay, that's fine. We can write that number down again. Just so you guys know, I don't go back and look at this bias chart. I have it up, and then at the end of the day, I close down my bias chart because I keep it up like this all day long. You know, I don't go back to ForexAnalytix because I'm the one that created it. So I just leave it on my screen. And when I shut down my computer at night, I just delete the bias chart. But I don't go back and look at it unless it's intraday. Like I don't go back like this morning and go, okay, what did I write yesterday? That's what I'm going to write today. I don't do that because for me, it's an exercise in memory. So if I, you know, do the analysis and I can remember the analysis, I know it's, you know, it keeps my mind always focused on the same levels. And, you know, so I don't go back and reference it again because I should know it by memory or really close to it. Because I, you know, remember exactly what I'm talking about because I stay on the markets pretty much all day long. US dollar, Norwegian krona. So the US dollar, Norwegian krona found some support. We were talking about this on the trading battle as well. This trend line right through here. Dave jumped in before me because they went to Dave first. I'm like, but, you know, I can't step on him. So I guess I could have, but I'm not that type of dude. So anyway, support here is going to be 857, 858. And remember, 200-day moving average, we continue to probe it. So if we break 870 now, that's bullish. If we break this 870, we probably write 871. But remember, we keep challenging this 200-day moving average right here, and it's threatening. And all we need right now is just crude oil to flip. Crude oil flips, dollar NOK will break out. And so I am, you know, I bought some earlier. So all right, I should probably write 871. And so you might see it. I've got alarms set up right here to be notified. Where's my alarm? There it is. It's right here at 870 because I want to be notified when it's up there because that means it's probing, right? Dollar MEX. So they forced my hand into trading this thing. Oh, like, okay, all right, whatever you guys want to do. You know, that's the thing about those little events, those live events like that. It's tradertainment. You guys know that, right? It's like, okay, well, I guess if that's what I got to do, stick a gun to my head. But support's the same, really here. Now we did slip below that 1990 level, which I was actually surprised that we did, but actually I wasn't surprised. As stocks spiked higher, of course we're going to break back below there. But this is all really key. So 1970. And resistance right now is 2010. And we're going to keep it range bound. Dollar yen. Now, here's the thing with dollar yen. And I think you got to pay attention to all the yen pairs. the dollar yen is probing where it should. Meaning, actually, let me rephrase that. It's holding where it should. If we break below 111.15, that's going to end up being a false breakout, and it's going to create a lot of havoc, I think, in the yen pair. So 111.15 key. Okay. Actually, you know what? You can probably do 111. I'm putting an asterisk next to both numbers just because I think if it breaks below 111.15, it should get your attention. Gets below 111, it should definitely be on your radar. It should definitely have your attention at that point, right? There's no if, and, or buts. So resistance is this channel resistance and this 161% extension is still 111.52. I know we probed above it, but I think 111.50. I think if you're long dollar yen and it makes it back to 111.50, you're happy and you're like, get me out, you know? So let's keep it on bullish for now. But back below here will flip me back over to range. Gold is still holding below 1800, which you guys know it's been like the number, right? I think we just need to make that there. Let's remove that. Let's remove this. I think 1800 remains key and 1750 is also key. So 1750. And I had written on my little pieces of paper, like, hey, watch gold, staying below 1800, still bearish on my notes. Silver, 2650, probing it, right? 2650, 2650. I know we're there right now. This is a, and I'm not suggesting you do this because I think it's questionable at this moment. But if you do trade silver, and you want to be short silver, this is probably the place to do it. You know, because you could risk 15 cents. I'm not, but let's also understand that silver's acted better than gold. So, you know what I mean? So maybe it's, you know, short gold with stops above 1805 or something. If you're trading metals, I know a couple of you guys trade metals quite aggressively, and that's what I would be thinking. But I think gold is actually the better choice than silver because silver has been holding up better than gold. Doesn't mean it's always going to be the case. It just is right at this moment. 2550 is support, as you guys know. Bitcoin, same as it's always been. 36.5, asterisk, bearish. Oops, bearish. 30K, asterisk, breaks below that. You know, bad things will happen to Bitcoin. S&P continues to stay bid. I mean, I know it's coming off a little bit right now, but did we see anything today that really changes the overall picture of the S&P? No. I know Steve's got some opinions about that. And you know, I also believe that the stock market's overbought, but it could become more overboughter, you know? So intraday support's going to be 4,300, then which you guys know why. So I'll say 4260, 4,300. While we're above those levels, you have to remain bullish. And next resistance is 2345, 2345, then 2378, 4345, 43. It's really crazy that the S&P 500 is where we're at. It's kind of mind-boggling, you know, considering the fact that only less than a year and a half ago we were trading at 4,200 or 2,200. I take that back. 2,200, 2,300, or whatever it was. It's nuts. All right, there's your bias chart. Stelios should be here. Hopefully you got a picture of that. If not,
I've got it. Yes,
Hey,
sir.
Estelle, how's it going?
I'm very well, thank you. How's your battle?
It was long and hard. It was one of those, and I told everybody on the battle, and in our little debrief afterwards, I told people, the staff or the crew there, and I'm like, look, under that type of environment, when you have mixed data, I wouldn't have traded, but they force us into making decisions because it's exciting, right? It creates that excitement, which I understand why they have to do it. But me, typically, you guys know me. I'm like, yeah, I would have sat on the sidelines here today,
especially ahead of an extended weekend.
Yeah, I know ahead of a long weekend, who wants to sell stocks if we're going to try to ride it out. But anyway, I mean but it is what it is. That we have to do whatever, to try to make it a little bit more entertaining for people. And I get that. But what my point to those guys is, look, we deal in the markets and we deal with retail traders. So I want to make sure that everybody that's watching knows that, hey, this is not our normal behavior. And as long as they know that going in, then that's important. By the way, the dollar's starting to bounce here. You're seeing the euro come off, the sterling's coming off right now. So just watch the dollar here. The US dollar Norwegian krona is bouncing, which I'm happy about. I'm going to let you guys take over because I haven't left my seat. For those of you that are not in our chat room, just to let you guys know, one of our AC units in our house went down at like 11 o'clock last night, and I was up till 1 because it was, and I actually had to move from my bedroom into a different location in the house to get a couple hours of sleep. So obviously I'm a little tired right now. Fortunately, it is Friday. Fortunately, we don't have a daily roundup today. So I've got to go deal with literally housekeeping. So thank God it's cloudy today. That's all I have to say. We don't have the sun beating down on our houses right now. So it's a good news. All right, guys. Hey, best of luck to you all. Good luck. I'm going to go let my dogs out because they're chomping at the bit to be let out. Go let the dogs out. Blake. All right. See you guys. You guys have a good one. Thanks, everybody, for your continued support. Have a great long weekend. If you're in the chat rooms, I'll probably be popping in. Well, I'll be in all day today, but I'll probably pop in on Monday. After I wake up, I'll try to sleep in a little bit and wake up and see where the market's at for those of you that are not in the U.S. But we are celebrating Independence Day on Monday. It's 4th of July weekend. So for those of you in the U.S., have a great weekend. Be safe. Be aware of the Delta variant. Just be cognizant of it. Try not to French kiss your neighbors. How about that?
Sorry, I can't avoid kissing my neighbors.
No French kissing your neighbors. This the thing is, like, I know here in the U.S., well, at least where I live, everybody's kind of like, forget it, no mask, and I'm fine with it. I don't speak. I kind of keep my my distance now when I talk to people. It's like I'm not up in anybody's face, and I'm just kind of aware of that. Like, just you know what I mean. Anyway, whatever. See you guys later.
Bye, mate.
Okay, mate. Yeah, so interesting reaction from the NFP.
Yeah, although we've already pared back all the earlier losses in the DXY.
Yeah.
So the
only thing that's really moved is metals, right?
Yeah,
I don't see anything else. But it moved the opposite direction to what I thought, given the number. But
yeah,
whatever.
The initial reaction was in the opposite direction of what we both thought, yes. But it's still early in the day.
It is.
So let's see, because the DXY has already pared back all its losses. Let's see if it can actually continue higher from here.
Absolutely.
Definitely a headwind to much happening is that we're coming into an extended weekend. Summer, extended weekends. Yeah, I assume
Yeah.
that many have already left. So yeah, we'll have to see.
Yes.
What else did we have, Celio?
Pretty much nothing, man. No, seriously. I mean, it was an anticlimax. We were all expecting this, and very little has happened. So yeah, I mean, I don't have
Yeah,
anything else to say. You know, bonds are doing well. Actually, you know, the 10-year yields are a little bit lower, but you know, a couple of base points here and there are not going to change anything. Cryptos are
indeed.
trying to get to positive territory. Currency is not doing that much yet. I mean, nothing.
Yeah,
So sorry, I'm not very helpful today.
yeah, I know it's not your fault. You know, it's these markets, whatever. Okay, so I personally haven't seen enough to make me change my mind about what I thought the market was doing pre NFPs, meaning I still think that there is the path of least resistance is higher for the dollar in the short term, and um, yeah, today so far we have a spinning top which doesn't tell me anything. So I would still favor a little bit more upside in the dollar before we find some kind of a resistance high and turn lower. Now, you know, I'll kind of ignore today's candlesticks so far because they've all turned already to indecision candles. And basically, you know, sustain all the opinions I had yesterday. So nothing has really significantly changed. Even metals, despite being bullish in the medium to long term, even metals, I think, are probably in some kind of a corrective consolidation. Might be here, you know, an expanding triangle. You can see both in gold and silver. So I wouldn't be surprised if we see another leg lower before we can actually continue higher. Nothing has changed with platinum, palladium. You know, very very strong. I mean, an amazing reaction higher. Cryptocurrencies doing more or less nothing on the day, but my medium-term bias that we should see more, you know, lower lows before we can see a decent bid coming through remains. USD CAD, since we mentioned it earlier, in my opinion, probably in some kind of a consolidation that will likely get resolved to the upside for one last leg higher. It can, for example, be a triangle, right? Like this. So, yeah, I wouldn't be surprised if this is the corrective part of the move and we get something like this playing out. There you go. Okay. USD NOK, more or less the same, right? Might be in some kind of a triangle and should need another leg higher before we're over and done. Aussie, there it is. Aussie, within the context of this larger channel, we expected a lower low. We got a lower low, but I do believe that we might see a bigger retracement within the context of this channel before this corrective move is over. Same deal with the Kiwi. The Kiwi broke through this pennant at at the beginning of the week, and you know, we might need to see lower prices. For example, we have a nice confluence of supports roughly at 68.50. We might need to get there before we can actually move higher. So I'm not changing my mind. I'm not looking in the opposite direction yet, although I'll be very, very happy selling dollars, but I don't think we're there yet. I don't think we've come to the point in time that the dollar rebound is mature enough for us to look for the trend to resume. Now, for the for the for the time being, of course, equities remain extremely well bid. We're more or less at all-time highs here in the Nasdaq, the S&P, IWM still lagging, but probably within some kind of a symmetrical triangle, which points to an eventual breakout higher. Dow Jones, different type of corrective formation. It might already be breaking higher. So there is nothing looking bearish in equities for the time being. Here's the VIX, by the way. VIX, any close below 1540 is going to be the lowest close in 15 months, roughly. So VIX confirming as well, right? So no real, here's the DAX, here's the FTSE. Somebody can make the case for both of them that they might be trying to top here, but I can make also the case that since this ascending wedge's inclination is actually rather shallow, I think there is a very good chance that this is a bullish consolidation. So even by looking at the FTSE and the DAX, I can envision another leg higher here. So I wouldn't be fading at them, not as long as price trades above the trend line support, right? So keep that in mind. Bottom line, I don't think you should be looking the other direction in equities until we see something real happening, right? So we're not there yet. Now, we end up seeing a continuation higher in the dollar. It's not going to be easy for equities to keep on moving in the same direction with the dollar for much longer. But, we're not there yet. I mean, they can move roughly in the same direction for a period of time. It's not the first time it has happened, and it's not going to be the last one. So I'm not really troubled by this for the time being. Anyhow, that's it more or less. Let me go through your questions and have a look at what you want to say. Unemployment numbers are a little worse than expected. Do you think unemployment numbers don't really matter? They shouldn't really matter, right? Because funnily or not, outside of the COVID, uh, the COVID black swan event that obviously got a lot of people unemployed in a very short period of time. The biggest moves we've seen outside that during the past few years in unemployment have mostly to do with the oscillation of participation rate. Don't focus that much on the unemployment rate. I know that it's the nominal and easy thing to monitor, but anyhow, the unemployment rate is at a big extent really fake, right? I've explained in the past the reasons why the unemployment rate is not indicative of real unemployment. The simplest explanation is because the headline number, which is what's called the U3, has a lot of its components stripped over time and passed to U6. So when we were talking about unemployment rates 50 years ago, people that were in part-time jobs but were looking for full-time jobs were considered unemployed. Nowadays, in the headline number, they don't. People that had been out of the labor force for more than a year were also considered unemployment. Today, they're not. Once you are more than 365 days unemployed, you get kicked off the U3, so you're not unemployed anymore. You still get counted in the U6, but nobody looks at U6, right? I mean, economists do, but ordinary people don't. So bottom line, if you want to have a better idea of what real unemployment is, you go ahead and US U6 unemployment rate. There it is. this is more of a better indication of what real unemployment is, right? The U6 rate, which is currently at 9.7%. Okay, and prior to this, it was roughly at 6.7%, 6.5%. So the low was 6.5% in the U6, and even the U6 is not a perfect measure of unemployment. I mean, it still strips out some people that used to be considered unemployed in the past. So if you want to have a better picture of real unemployment, look at the U6 always. Okay. So these type of unemployment numbers you were seeing, like what was the low that we had reached, like supposedly 3.5% or something like that. These are completely out of this world numbers. Forget about them. I mean, they have no connection to reality whatsoever. Out of curiosity, if one short silver, which target should one look at? Okay, let's have a look at the short-term chart to be exact, and let's have a look at silver. So, we have this rectangle, right? So if you want to be short silver, this is a nice place to be short for a move down towards the rectangle's trend line support, and to break through that one has an implied target of 2450. So first downside target would be 2550, and after that 2450 from here for silver. USD MXN, yeah, absolutely. Let's have a look at it. There it is. Okay, so here's the USD MXN. Now, putting things in context. So, USD MXN remains. No, let me say it otherwise. MXN remains one of the strongest commodity currencies against the dollar, right? That's why you see that the reaction from USD MXN has been very, very different from other commodity currencies so far. For example, if you want to have a look at it, to have an idea, let's pull a new chart with MXN USD to have the MXN as the first component. And let's overlay the Aussie. You see? Look at the short-term price action, right? Look at how much better the MXN has been performing. Now, add the Kiwi. Same deal. Add the CAD USD. You see the difference? CAD has been also doing, rather well. Actually, it even had this period of overperformance. So we see a little bit of a difference between some of the commodity currencies with the rest. And that is a little bit troubling if you want to be long the dollar against it. And I'll tell you why. Because we've already seen, most likely, in my opinion, at least the first half of the move higher in the dollar. Now, and the USD MXN has barely managed to rebound. Bottom line, um, wait a second, we got factory orders. Let me see. Factory orders more or less as expected, slightly better, 1.7 versus 1.6. Clearly, this is not going to move the market. Okay, so bottom line, what I'm trying to say here is that I would be very, very careful because we get the dollar going back to weakness mode. I think that USD MXN might have a lot more downside. So keep that in mind. Now, as long as we trade above the lows, which we found there in the beginning of the year in January, we can see a second leg higher, I guess, in the USD MXN. But why be long comparative weakness? I mean, we've seen the USD performing really poorly against the MXN in comparison to other currency pairs. So why be long the dollar against the MXN and not against something else? That's why I would not choose to buy the USD MXN in any way, shape, or form. Oppositely, when I feel that the US dollar is reversing lower once again, if this behavior is still the case in USD MXN, USD MXN might be one of the best shorts out there. Plus, you probably have a decent carry. Let's see. Banxico rate. %, right? So you even have a very nice positive carry. So why not? I mean, 2 in 1, right? The currency looks rather strong against the dollar, and you even have a 4% positive carry, which for nowadays standard, I mean, I was still a trader when getting a 3-4% positive carry was considered like, you didn't even call that a carry trade back then. Carry trades back then were like more than 10%. Nowadays, 4% is considered like, oh my God, I have a 4% carry. Michael says, yeah, I agree, Steve. Also is the same story with USD ruble. Yeah, let's have a look at the USD ruble. Yeah. By the way, so far, this rebound in the ruble looks, so far at least, looks corrective to me. We break through this trend line support in the USD ruble and we're headed much, much lower. So keep that in mind. And yeah, I agree. My stockbroker recommended me the SNCR, Synchronos Tech stock today, based on company fundamentals. What about the chart? Let's have a look at it. SNCR. Something is happening here for sure. I don't know what happened here, but something happened, right? You can see this reaction. A rather impulsive reaction higher. So, technically speaking, doesn't look bad at all. For at least one more leg higher. Doesn't look bad at all. Yeah, find out what happened here. I'm very curious because something happened here. And as you see, it's not earnings. And look at the volume behind this move. So we had this major move higher with a lot of volume behind it. So I can see why they recommended it. Something obviously happened with the company here and produced this buying interest suddenly coming through. Having said that, you always need to be sure you realize where you're getting into. We're talking about a company that in 2016, 4.5 years ago, right? Because it was November, was trading at $50 almost. Now, there is one positive thing with this super ugly looking chart. Is that, the rate of depreciation has clearly stalled, and somebody can make the case that we might have been building some kind of a base here, right? But it's not easy to ignore that this company was trading at 50. A few years before that, it was trading at like 54. And the market decided that its fair value is less than 10% of what it was. Now, for a market to lose more than 90% of its value within, for a company to lose more than 90% of its market capitalization within 4.5 years, there must be a very serious reason. So, personally, before finding out what caused this sudden interest in buying a stock that was looking kind of doomed, I would also make sure to find out what happened and this market collapsed in the way it did. Okay, anything else, guys, gals? Any more questions before we call it an extended weekend? FFIV. FFIV. I'm worried about this one. I think there's more downside before higher. I think there's more downside before higher. That's what I think. Now, there is a chance that this is the corrective move, right? So the one leg lower assumption, which remains my main one, to clarify, is not without restrictions, meaning, I think it remains valid as long as we trade below here, 205, let's say. Okay. As long as we trade below 205, I think we most probably will need to see a lower low before it's done. And the break below this channel trend line support clearly, triggers the next leg lower. In which case, I would look for. Let me see. Oops. Sorry. I would look for 160 as a target. 160. Natural gas. Yeah, absolutely. Natural gas. Here it is. Looking very healthy. Probably in some kind of a short-term consolidation here. I think higher. Now, worst case scenario, even if we pull back, 340 is going to be a good area to buy it again. But we might not even pull back. We might just spend more time consolidating there. CHS. Let's see. CHS. Phew. There is an example of a market that was getting demolished and finally woke up. Let's hope that the same thing will happen with the company our friend chose or got suggested. So this is a very nice breakout from a multi-year descending wedge, right? And we seem to have gone parabolic, and we have a sequences of 1-2s here, which is like a very bullish thing. Now, admittedly, we started seeing some RSI divergence. We're extremely overdone in the short term. So bottom line, I wouldn't be chasing this up here, but you see a pullback there. I think it's a good buying opportunity, right? Close to 5. Bye-bye, Michael. APTV, cap and handle question mark, APTV. Yeah, I guess you can see it as a cap and handle, although there is an even simpler explanation. We had a symmetrical triangle and we've already broken above it, right? So in my opinion, probably we're not about to break higher. We've already broken higher. But yes, you can also look at it, which gives even extra confirmation. Like you can look at this as a cap and handle formation. There you go. The cap and handle formation's target points to 185. There you go. In any case, it's not looking bearish, right? It's looking bullish. Any way you slice it, symmetrical triangle from which we've already broken out. Likely, very, very, very likely. Cap and handle formation from which we're currently trying to break out. Sure, why not? Let's also measure the triangle's target since we are at it. So the 100% extension of the triangle. Oh, look at this. Look at this technical beauty. The head and shoulders, the cap and handle formation's target confluences with the triangle's target. Right? I mean, the difference is like $2. $2. Where to put the stop in playing it as a cap and handle formation? If you want to trade it as a cap and handle formation, the answer is very simple. There. You don't want to see a move below the shoulder. Sorry, the handle. So you don't want to see a move below the handle. You do, Malia. Okay, so I wish everybody a wonderful weekend. For those of you that also celebrate the 4th of July, wonderful extended weekend. And we're going to be back on Tuesday, back on the webinars, because we're going to be, doing analysis and all on Monday as well. So enjoy, be healthy, and talk to you again on Tuesday. Bye.